Let us begin with the markets, because if you didn't pay attention all day, well, first, shame on you. Second, it was a wild ride. The Dow finishing up or starting up, then finishing lower. All this because of what else? The Federal Reserve, Fed Chair Jerome Powell, and other officials tempering hope somewhat of a rate cut. The Dow and the S&P actually posted their worst days of the month. But it was the NASDAQ and some of your favorite tech stocks that took the brunt of the beating. The FANG, Bit, Microsoft, Alphabet down 3%, Facebook off 2%. You get the picture. Guy Adami.
Yes, sir. Welcome.
Mr. Fracas. What do we make of what the action was today? Is that how sensitive this market is to the Fed?
That's the rhetorical question, as you know. I mean, it's extraordinarily sensitive, Brian. I think you knew that when you asked the question, and I'll say this as well. The fact that we get to 29.50 again and again and fail, I think is problematic. And we do it when the VIX gets down to 15. Pete can speak to that, which has been levels where the last 6 to 8 months, the market has topped out. I think the market is overestimating the power of the Fed. And I think unless we get a trade deal, which I don't think we're going to get, I think we do roll over at these levels in the S&P 500.
Okay, you just gave a lot of numbers. We're talking about the Fed, but it also...
That's what we do here, Brian.
It sounded like you're also saying that it's not just the Fed. Technicals are playing some kind of a role.
Look, I think you have to take them into consideration. I mean, this was a level that we topped out at in the fall. We retested it, seemingly topped out again. When the VIX gets down to these levels, it's historically been a level where the broader market sells off from. The Russell hasn't backed up this move to the upside. The transports haven't backed up this move to the upside. Gold continues to rally. All those things to me are warning signs.
Tom Seberg, what do you think?
Yes, Mr. Seberg. Look, the bottom line here is I think you've got a dynamic where the expectations for the Fed, I think Guy framed it well. It's not that the Fed is not all powerful. In fact, it's completely the opposite. They are everything right now. And when I hear Bob Kaplan, Dallas Fed, put out a paper talking about the limitations of monetary policy at this point, when I hear Powell step back a little bit, I think he did what he should have done a week ago when it looked like the Fed gave us more than we could have possibly expected. Because the bottom line here is I don't think that that's going to help this economy. I do think that getting to neutral and staying there on the Fed is very important. The most important thing right now remains what we're seeing on macro data. If you look around the world over the last couple of days, it hasn't been good. Hong Kong trade data last night, not so good. French business confidence, not so good, following Germany's business confidence. So you name it, bond yields, that's what you should listen to. Having said all that, people want to look at double tops and this and that, and I actually think technicals are very important. I think this is all about the Fed right now.
I totally agree. I mean, at this point, we've got 4 Fed cuts priced in by April next year. Until today, people pricing in 50 basis points at the July meeting. What justifies that? Even if we had soft consumer confidence data today, even if we had squishy housing data today, the inflation number is not that far below the Fed's 2% target. The jobs number is soft in May, but that's 1 month. We know it's a volatile series. So fine, they're letting us know they'll probably give us a 25 basis point cut in July. Probably, not even guaranteed.
Probably, because I'll tell you what, Rebecca, last week, Steve Leisman's survey showed 100%. That's all the percent of people surveyed said we're going to get a rate cut. And whenever there's 100% certainty on something, maybe you don't want to be certain. It sounds like you think there's a chance we won't get a cut.
Look, we have a lot of data next week. Next week's going to get interesting again because we'll have the G20 outcome, whatever that is. But then we have a non-farm payroll report on a Friday after the 4th of July.
OPEC,
kind of a yawner.
OPEC. We've got manufacturing confidence coming out next week. So there's a lot to chew on, and earnings season will come up again.
On a short week with low volume.
Exactly.
By the way, we will be doing Fast Money that Friday, July 5th. And I bring that up because I will be here. Just to be clear.
Well, I mean, some people spotted people.
It's pretty exciting to be here on
be very excited, Pete. Come on.
There's going to be 5 guys in Canada.
Hi. How are you?
Thanks for doing your job.
Yeoman.
Thanks for doing your job.
Thanks for doing your job, buddy. Because without that liquidity, with the jobs number, with the Fed in focus, there's a lot that we need to digest as investors.
By the way,
I pulled that back for you. You appreciate that?
It's great to have Rebecca on the desk for many reasons.
I'll push back a little bit. I get it. But here's the thing, Pete. We're going to do this tomorrow on the 5 a.m. show. You're going to be joining us on Worldwide Exchange. If it was just our Fed, why is China up? Why is Germany up? Why is Brazil up? Why is gold up? Why is Bitcoin up?
A little bit of everything, right? I mean, everything's up, and we're all wondering why, especially when you're seeing weakness around the globe for the most part. So, yeah, it's a great question. I think what we're seeing today and what the reaction was today was not that we're not going to get a cut, and I still think that 100% is pretty close to what I would put it at, somewhere very close to 100% a cut.
Come on, should we be sure of 100% of anything right now?
Well, yes, because these guys have basically, and Trump has put it out there that we're going to get a cut. Now, I don't think it's 50. I think it's a quarter. So that's the one difference. And I think today that was the shift. The shift was to a quarter. Let's step back for 1 second, right? Were we down a lot today? Were you just scared to death today when you were looking at the market because we went down 150 points at virtually right off record highs? Absolutely not. This right now is Fed driven, and everybody's also looking G20. Everybody wants to know, is there going to be any progress with Xi? Yeah. So there's a couple other things. I know you guys keep saying everything's the Fed. It's not everything. It's not everything. I mean, trade is still, to me, much bigger than the Fed.
I think red is more powerful than green, sort of from a narrative perspective sometimes.
Wow, that's deep.
But we are in the middle of our best June in 70 years.
1955.
You know,
I just did the
and we're down 100 points or so something today. So that's really, holy smokes, that's really terrible.
This has been a pretty spectacular month for equity. If we move up every day, shouldn't that's when we should be nervous?
Yes, absolutely. No, look, we've had a huge rally in June coming off of May. Low yields have definitely helped that, right? People are expecting better numbers out of housing and other interest rate sensitive sectors. The housing data today gave people a little bit of pause around that story. I think with the consumer confidence today, we know that data follows equities. So the fact that May was bad for equities, consumer confidence, not a shock. What's important from that number today is the jobs plentiful, hard to get. So that little number inside that data point softened quite a bit. And that's important because it's another data point to put together with payrolls just to make us say, okay, we need to keep a close eye on the labor market. Manufacturing soft, we understand that. If the service sector and the consumer get soft as well, then we have a problem.
And really quickly, I think it's important because if you look at where we're starting to see deterioration in labor, it's in the European Union, which has been the one labor market we needed to get stronger. And the Fed's comments on inflation, where they were getting some pressure was from wages, and that's disappeared as well.
So it's interesting. I mean, I'm with Pete. I think the G20 is really important. I think a China trade deal is really important. I just don't think it's going to happen. Right. I think we're sort of getting strung along. And quite frankly, if I were the Chinese, I'd do the same thing if you really want to take a step back and view it from the prism that they look through. And in terms of the Fed, you know, the president talks about all the time, this is the greatest economy in the history of the republic. He said, not my words, and maybe it is. I don't know. I'm not an economist. But if that is the case, why are we even contemplating? Forget about a 50 basis
because he's trying to neutralize it out against the rest of the world.
You know,
that would be his statement.
Because the ECB and Super Mario Draghi have hit us over the head that they will either A, be cutting, B, doing bond buying, or C,
what's
all
that
the
done
above.
for those economies, then, Brian? I mean, what we've seen here.
But Trump has been mad about currency issues, and his whole point is, I think your point is correct, and your point is correct, which is you got to balance it out. If they're going to cut. Because you don't want to see the dollar get stronger, Guy.
Of course you do. You buy things. No, Rebecca buys things. Pete buys. I know I buy things.
But our administration doesn't.
I understand that. But for years, it's a stronger dollar policy. You know, the madness is if everybody's driving themselves into the gutter, why follow them? This is an opportunity to strengthen our underlying economy. Might be painful for the market, but it would do wonders for the economy.
I'm voting Adami 2020. He's got an eagle on his shoulder. He's got an eagle. That might be a pigeon.
Now,
I'm not sure. Let's broaden it out. Rebecca, here's the thing, though. Hold on. I want to expand it. We talked about technology, the FANG stocks, bit, and all this stuff. What does Google have to do with the Fed? What does Microsoft have to do with the Fed? They were down 2 and 3% today. I understand our broader perspective. What does Alphabet care about interest rates?
You know, I know this show is fast money, so we're talking about what's happening now, but I would take a step back from this and say, if you think we're going to continue to look for companies that can grow organically, if the trade war gets worse, global growth slows further, I want companies that are doing something interesting, whether it's biotech, whether it's technology, that can grow on their own. And so I'd say if you have a day like this, you're probably looking at an opportunity.
You know what? You just made I'm going to drop some genius on this show. You're welcome, producers. We need a segment on this show
called what?
Pump the Brakes. Where once a segment, people like Rebecca come in with some wisdom and they slow it down a little bit.
Pump the brakes.
Pump the brakes.
Don't want to slow it down too much.
Guy, what were the brakes like on your IROC Z?
You don't have to pump the brakes anymore because the new cars, when you put your foot on the brakes, they have the. In the old days,
he's a car guy.
68.
Can we
that's a good statement. Go ahead, Tim. I'm sorry.
When he's not in an Uber, he's being driven around in a limo.
No,
I drove my Jeep into the Port Authority tonight.